Hey guys, Mark with Think Insurance. Today's going to be a little bit different video. I'm actually going to show you how to do insurance quotes. I'm going to use a platform that I've used before that quotes multiple companies. And then I'm also going to show you the different things that affect the policies and how they affect them. So this might be a little bit long of a video. I'm going to try not to edit anything out because I want you to share the information. I will tell you I'm using a fake address. I'll put my name in there and then a fake birthday, and then eventually I'm going to add a fake spouse. I'm going to show you some different examples of different situations. So if you guys want to learn more specifically about that, if you want like your specific situation and you want to see if I covered it, in the description below, I'm actually going to put timestamps. And I'm going to give examples of adding spouse or adding a second car or different zip code, things like that. So I'm going to try a couple different things. We might even get into a little bit of rideshare stuff where it's like Uber and Lyft. But I think I'm going to hold that off for another video, so you guys stay tuned. If that's interesting to you, subscribe so you get that notification when that comes out. But other than that, I want to just show you just some in-depth things that you're going to see. So these are the things when you're talking to an agent, this is what they're showing. And then don't worry, I might blur some stuff out because some of the stuff I don't know if it should be shown. So that stuff I'll just blur out and I'll explain it. So let's just go ahead and dive in. So I'm actually going to use a software that checks multiple companies, and I'm going to try to get close to the mic because the audio is more important than seeing my face. And I'm just going to make up a person. So I'm going to use my name. So we'll just say Mark Flockhart. And then my birthday, we'll just say is 1/1/1982. We'll say I'm single in this case. And then I pulled an address, just some random address. Here's a shout out to whoever's selling this house. It looks pretty darn cool. If I was single, yes, I would love to live in this house. But for this purposes, if I can get around the camera here, let's just make this pull up. There we go. 669 Hoyt Street is going to be our address today. Okay, this is going to be in Grand Rapids, Michigan. Now, each state does have different rates, so that's going to play a pretty large factor as far as the zip code that you're plugging in. So this is a single family home. We're going to say, not that it matters, but being a homeowner in some states matters. It used to in Michigan. It doesn't anymore. We'll say that I've been there for at least 4 years. Because in most cases, and I'll show you a little trick, when you don't do that, it makes you add another address because it's trying to pull your data. These things are little smart computers, and it's looking for any way it can pull your cars and all that stuff. So we'll just put in a fake phone number here. Those are our area codes. And then I'm not going to add a spouse here, so we're just going to continue with just an auto quote. We're not going to dig into the home today. So I'm going to check several different companies. We'll use some defaults. We're going to use some defaults here. And we're just going to say this is a test quote. All right, the effective date, we're going to just make it today, July 18th. Yes, you're going to run my credit. Unfortunately, there's not a way to do that. It doesn't actually do what's called a hard hit, so it's actually not going to affect my credit in any which way. We'll just say I'm with Allstate. Great. My liability limits here are 100, 300, we'll just assume. And then we're going to go ahead and just say my expiration of my current policy is today. We're not going to say I've had insurance for very long. I'm just going to say that I've had insurance for 8 months. And then we'll come back and show that difference between 8 months and 3 years and 5 years. You're going to notice a pretty large difference here. Most common, so in Michigan, our actual default for the state has now been announced that it's $250,500, so $250,000 a person, $500,000 per accident. So we're going to leave that as our default, even though I'm lower, and that will also affect my rate, which you're going to see here. Maybe, because that law changed too. So maybe we'll play with that. Property damage buyback, so I can buy my car back if I'm in an accident. That's an option. I do need to list how many people are in the house. So we'll say I have one other person in the house. Let's say I have a 10-year-old kid, and that person lives with me. So that's going to give me a little bit of extra because I have to have some sort of medical in the state of Michigan. Okay, we're not going to do anything here. We're going to just leave this what's called unlimited medical. So if I get hurt or my person that's in my house gets hurt, we've got unlimited coverage there. And then we'll play with that too. So now that we go next, we're going to unselect all these cars. So it's trying to pull data most likely from this address. So there's a good chance that some of these people are pulling up. I'm going to leave myself here. And then I'm actually going to use the most common vehicle, which we're going to call is the 2017 Toyota, not Tesla, Toyota Corolla. Okay, and then here, engine size are all pretty much the same. They're all 4-cylinder. So these are just different trim models, different cloth versus leather versus whatever they have in that car. Purchase date, some companies care about this. So I'm just going to say I purchased it January 1st, 2017. Even though I'm making up most of this information, you're going to find that none of this is affecting the rate. I can change the purchase date. Only really Progressive at this point is going to come back a little differently. But this isn't going to matter. The mileage I drive is going to matter because they're starting to use mileage more often and they're verifying that type of stuff. So we're just going to say the most common. I drive 10 miles to work, 10 miles back, 10,000 miles a year. Full coverage, yes, I'm going to do a $100 deductible on my comprehensive and then a $500 deductible on my collision. In Michigan, we have different collision levels. I'm going to do the basic, which is the most common. Okay, towing and road service, why not? Let's give me a little bit of towing and road service. It's my only car, so if in an accident, I want them to pay part of a rental car. And then I know that this car has a couple little security features, so will give me a few more discounts. Okay, it's a standard car. It's not a performance or a sports car or anything like that, so we're not going to have to dig into that. And then let's just go ahead and click next here. Okay, so now my information, I'm a male, I'm single, I'm the principal driver, there's my car, I have a valid license. My license is, we'll say it's Michigan, and it pulled somebody random's license, so we'll just delete that out of here. It masks it, so that's not their actual license, whoever that person was. Occupation in a lot of states matter. In Michigan, it used to, no longer a rating factor. But for this example, we're just going to say I'm in sales. Your college degree could help you in some states. Once again, Michigan removed that rating. So bachelor's degree, whatever or not, it doesn't make a difference in my case. Okay, and I apologize, my dog's in the background. All right, so then claims and tickets, we're going to leave that off for now. We'll go back and change that, but we're just going to run this without this. So we're going to answer some of the main company questions that they want to know. So AAA is asking me, do I want the Advantage plan, the Ultimate plan? I'm just going to stick with the basics. Most car insurance plans are very similar to each other. There's nothing special about them. Let me back that up. I say that wrong because there is a lot of special things about them, but most people don't pick them because they don't see car insurance as like, I need the best of the best plan. I don't want to have the extra towing. I don't want to have the extra this, extra that. Some companies, which you'll notice here in Safeco and some of those other guys, have some really, really good extra bonus plans and are really worth it. But we're not going to dig into that in this video. So I'm just going to pick kind of the default basic plans for now. We're going to say, no, I do not have a AAA membership. So I have to buy a AAA membership in order to be insured with AAA. And then the rest of the stuff is just pretty basic. I'm not going to do right now. I'm not going to choose these AAA drive. You'll know it as Snapshot or Telematics is the name of it. So that would be like the different secret or the different tracking devices that give you a discount. Okay, so Citizens, which is Hanover, we're going to say, yes, give me account credit. Since I have a bachelor's degree, we're just going to say, we're not going to say alumni because that's that discount that got pulled away. I'm going to say I'm a credit union member in this case. So I'll get myself a little bit of a discount. I'm employed, I'm not retired, so that's fine. Also, Michigan insurance, we're going to say I've got multi-policy, so I'm going to do renters with it. We can just assume renters is like $20. That's typically the average almost everywhere you go. Some states, some areas are 40, some are 15, some are even $125 a year, which is like less than close to $10. So it's pretty cheap. Same thing, credit union, we're going to say we're going to say no to this PACE endorsement. That's that package. We're just going to assume just kind of a basic policy. Now it's going to ask me how long I've been loss free. We'll say no losses in 5 years. And Michigan insurance, I don't want to enhance anything. I'm leaving all the value adds off. Same thing with Nationwide. We're going to do paperless. That's a small discount. We're going to do multi-policy, which is the renters. I'm not going to do any type of life insurance or financial products. We've got the telematics off, credit union member, and then I'll just kind of skip through all of these so you guys don't have to be bored with this. Safeco, yep. Now we said I've only been insured for 8 months. So we'll say 8 there. That makes a huge difference, by the way. So months insured matters. Enhanced, we're going to just do essential in this quote. That's that package. Now these packages make a huge difference. These are really beneficial, but we're not going to go into those right now. Credit union member, I've only had insurance for 6 to 12 months. And then I do make over $9,000 a year. So we'll go ahead and rate that. And now what it's doing, and this is actually like a real-time quote. So when you're calling agents, they're actually doing what's called real-time quotes. Some have softwares which have to be updated constantly where it gives you kind of an estimate quote. This one's actually connected. It's actually plugging in as I answer these questions. It's going on every website and answering those questions. And so it's kind of filling those in for me. Now, some of them are giving me errors, and it's just things that I've done. So it's saying the rating request could not be processed. So the VIN for the car, it didn't like the car. Same thing with this one. The quote was unable to process. I'd have to go directly to their website to get this quote. So we're not really going to dig into that too far. So right now, not bad. I basically would be about $166 a month for standard car insurance, full coverage. That's actually not bad for Michigan. Michigan's the highest in the nation. Hopefully soon it'll be the lower one because we've changed all of our laws as of July 2nd. By the way, if you haven't watched those, I'll put those videos up here. But then we're going to dig into this a little bit further. So what are the things that really affect your rate? Mark, you keep telling me that if I'm married, there's a discount. Well, yes, that is the case. Huge discount in a lot of cases. This one should not make a difference. So let's try this. Because the state of Michigan has mandated that being married or single does not make a difference on your rating. So if I go to my driver and I put myself as married, that alone should not change the rate. And let's see if it does. I'll pull up my little snippet tool so I can take pictures of these. Okay, same price, $167. Good job, Progressive. All right, so then that in your state, so if you're in other states, I think Texas and like probably most of the states actually give a discount for that. Now, let's do another thing. Another thing in Michigan is that the length of current prior is temporarily suspended. So if I don't have insurance currently, that doesn't make a difference. But let me show you one of the tricks. In most states, this makes a difference. So if I have been insured for 8 months versus, let's just say 3 years. 3 years is kind of like that little spot where they're like, we love this guy. Now, I can't just change it here because of the program that I'm using. So I'm actually going to have to go in here. There's a couple of these guys that I need to change the months insured. So we're going to put these to, we'll just say 3 years to 42 months. Okay, did I snippet this? No, I did not snippet it. Okay, that's fine. So we were at 167 before. Married didn't matter, but now that I show that I've been insured for 3 years, so with Progressive, it really didn't make much of a difference. Now, Nationwide's coming back more competitive. They're saying, I want to insure this person. Let me make a correction here because I don't want Progressive to look bad. I made a mistake. So I know Progressive cares about that. And this is where being an agent, having the right agent actually makes a difference because I accidentally forgot to change this. So Progressive should have been more than the 167. So that's my mistake. Going back to that, so let's go ahead and take a photo of this rate. And let's dig into the next part. So here's kind of our best prices. We've got 157 from Nationwide. Now keep in mind, if the agent knows what they're doing, they're going to do their own math because Nationwide has been a little bit wonky with their prices as far as the actual truth of it. $1,974.46. Divide that by 12, and they're actually 165, not 157. So it's just, I don't think it's Nationwide. I think it's just the connection between the software that I'm using and the quoting. So that's the thing. So here's the other thing. This is going to make an even bigger difference. Let's say that I am married and I do have a spouse, and I do have a second car. So I'm about $160 to $180 per car. I'm just going to grab, let's just put in a random vehicle. So let's say I also have a 2017, we're just going to pick a Dodge Challenger SE. Nothing, probably a bad example. This vehicle is going to be more expensive, and I'll show you why. But we're going to say that we bought this January 1st of 2017. It is going to be, we'll keep it the same use. So we'll say, well, let's say it's backup car. Let's just say I'm not going to drive it for work. It's just pleasure. And we're going to drive it, let's just say 3,500 miles a year. Okay, so that's not going to be a huge difference. I do want full coverage on it. I don't need the rental car at this point because I have two cars. So I'm going to remove that rental car coverage. I am going to keep the road service on it just in case because it's cheap. And then I'm going to add those little discounts, the recovery system. Let's just say I have some sort of OnStar tracking system. Now, keep in mind, this is where I said that there's a small issue with this vehicle. This is why when someone says, I need a Dodge Challenger and you're 18 years old, it's because that vehicle is going to be ridiculously expensive, mainly for the fact that it's a high-performance vehicle. I don't care how fast it goes, it's listed as a high-performance vehicle. That's why when you see a crossover vehicle, it's listed as a station wagon or a van, because it lowers the insurance rate, so it's an easier vehicle to insure, which in turn makes people want to buy more of them. So in this case, we're just adding the second vehicle. Being married doesn't matter, but I'm going to go ahead and add a spouse, but I'm going to show you what that does. So now it wants to know, do I want to add snapshot? Do I need to answer any other questions about the vehicle? No, I just have a second vehicle. So as we know, we're about $160, $180. That's for one vehicle. So in reality, if I add a second car, it should be about $350 to $360-ish. And let's see what this does. Look how cheaperish that is. So Safeco now is coming back competitive, saying we like this, we want this, we like two cars, we like full coverage, this is our customer. So now they're coming back competitive, saying $265. But wait a minute, Mark, you said it was supposed to be $3 something. It was, but the multi-car discount is probably the second biggest discount that you can have in insurance. Plays a huge factor. I'm going to keep going. Let's add a spouse. So let's go to driver. Hopefully this doesn't kind of blow all of your minds. We're going to add some random person. The name does not matter, so we're going to call him spouse and spouse. And we'll just say her birthday is January 1st, 1983. Okay, so we've got a spouse. We'll make it a female, and we'll put her as married. And then she's driving the Dodge Charger. Now I'm going to go back and change the vehicle usage. And we're going to say that she's driving hers to work. Let me delete that, 10,000. Hers is going to be the same mileage. We'll just say she's driving 8 miles to work. So she's driving, we'll say 10,000. Let's not mess with the algorithm here. Everything else is the same. So now that I've added my spouse, we were at $240, $250-ish is what we're looking at price-wise. And we got to add she's employed, great, rated, she's got good income, 9,000 or more a year. Woohoo, we're YouTubers. All right, let's see what we got. Okay, so we dropped about $10 a month. That's $120 a year. That's for having a spouse. So these have gone down, not having the spouse, but what it's doing is it's taking that second person, because in this section, we did not say she has a ticket or an accident. So having that spouse or that other person has brought that liability and separated it. It's now taking some of that expense of the car's liability and putting it on her versus all of it falling on me. And so that's creating a lower price. Let's go back and let's go ahead and say that she's not driving. She just partially drives. She's driving. Go back to that 3,500 miles a year. And let's just pretend this is pleasure use only and see how much of an effect that having that second person versus having the better mileage made. Oh man, look at that. The difference between driving to work and back versus driving just for pleasure made it cheaper. Wow, driving to work and back is more expensive. Business use, same thing like that. All of that's going to be more expensive than that. Now, Progressive's coming back and saying, we want a piece of this too. But right now, this Safeco company, they're kicking butt. They want my business. State Auto's starting to chime in. Remember earlier, they're like, no, we don't want this. Don't even bother. Go to our website. Figure it out yourself. Make it difficult, right? Now they like it. This is a risk we want. So they're starting to chime in a little bit. Let's go ahead and keep going. If you guys are still with me so far, first of all, thank you for watching. I've got a handful more that we're going to go through. If you saw one of the situations that you were curious about, maybe ask and we'll go over that. Don't go ahead and put those in the comments. Definitely, if you guys like this video, if you want to watch more, I've got a whole bunch of videos about insurance and ways to save money and discounts and things on my main page. Don't forget to subscribe and all that fun, lovable stuff. But let's go ahead and do a couple things. So let's say, because my mind's working, how much of a difference, first of all, let's take a picture of this. How much of a difference did this make because I bought a Dodge Charger? Because I'm at 294 to 305-ish is kind of the competitiveness. So I'm going to go into the vehicle and I'm going to switch this. We're just going to make it a Chevy. Let's make it an Equinox. Let's just say all-wheel drive because we're in Michigan. We want same 4x4, same engine size, so this doesn't really matter. We're going to go ahead and rate that one and see what happens. So before, we're at that 280 to 300. The 230 is our best. Okay, it did play a factor, but in a good way. So instead of 230, $6 a month, that really wouldn't deter me from buying a vehicle. But Progressive went down. They were 294 before. Now they're 243. So $50 a month is that Charger. No, it's not. I don't want a Charger for $50 a month extra. I would rather drive an Equinox. I have kids, so I apologize if you're 18, 20, whatever. Maybe I would drive it if I was younger. But in this scenario, I'm husband and wife, and we've got, So now it's kind of interesting to see some of these people. Oh, they just timed out. They're not saying no. They don't like the vehicle, the VIN number. They're having an error here with them. So a couple of these companies kind of bowed out a little bit. Let's go ahead and do another step. So let's go and test the early shopper discount. That's what I call it. It's essentially, everybody has their own name for it. So typically if you buy a policy 7 days in advance or 7 days out, and before we do that, I'm actually going to re-rate it to see if I can get AAA to give me a price. But typically if you push a policy that's 7 days out, you're going to get a discount for that. I don't know if you guys know that. Versus if you put it out 15 days out, there are some companies that do give a discount for that. So don't just think 7 days only. Try 15 or try even 25. I think I've seen a company go 25 days out. They gave a larger discount the further out you went. So they're not going to give me a price. They're just having problems. But let's go back and let's change this effective date. So let's say, let's go, there's 7 days here. We're going to go 7 days exactly. And then we'll come back. And then we will, because I said it expired. So we're just going to say, it doesn't matter when the policy expires as long as it's not passed. So we're going to go out 7 days, and then we're going to go back and go 10 days, assuming that AAA gives me a price, because AAA goes 10 days. You have to buy the policy 10 days in advance, and then you're going to get a large discount for that. They're not pulling, but they normally would. So let's pull this up here. We were down to that 224 range, so it looks like we're not doing a whole lot different. I don't believe Safeco does give an early, yes they do, I know they do. So we're missing something there. Progressive went down a little bit, so that's cool. And then let's go back and do this one last time, but let's go out and say 3 weeks. So 2 weeks, we'll say 14. Well, let's go out. Let's just say the 15th of the following month and see how much of a difference that's going to play. By the way, guys, let me know if this is useful. If this is something that you guys like to see the different samples and examples and whatnot, I want to make sure that I'm at least bringing you guys value, because me staring at my computer doing quotes is not what I think is fun on a Saturday. So let me know, assuming that this is helpful. Okay, so not really much of a difference. There was a little bit. Progressive is coming in competitive. And you may ask, Mark, what's this Progressive Choice versus this Progressive? Well, Progressive Choice is them saying that if you did snapshot, if you paid in full, if you push it out in the future, if you do all of the discounts that we can possibly give you, here's what it would be. That's their best foot forward. And it's a big difference, because I will show you this pay in full. Look at the difference in price. You're talking $237 a month. So you're talking $2,800 versus $2,400. There's a big difference. They give a really big discount if you paid in full. That's where having an agent comes into play, someone that knows the system, knows the tricks, knows everything to get you the best prices. So let's try a couple more, and then we're just going to end it because this is a pretty long video. Let's give me a ticket and show you how much that plays a factor. Let me take a snapshot of this first here. So we're just gonna get these guys out. I'm sad that I'm not getting a rate from these people. So let's go back and get rid of this vehicle. This vehicle is obviously bothering them. Let's just put it as a Chevy. We'll just make it an Impala. We'll do the 4-cylinder. Now we'll do 6. We're not buying a 4-cylinder Impala. No thanks. Let's give her work use. We'll make it more realistic. 10,000 miles a year. Give it full coverage. We've got the road service, but no rental car. We'll share a car if we have to. And let's get those prices. So we're going to, once this loads, we're going to take a picture of it here. So you'll notice changing the vehicles around a little bit doesn't make a difference until you start getting into those performance vehicles. Once you start getting into like the high performance, a lot of Audis, a lot of Infinitis, a lot of the Dodge Chargers and things like that, that's going to make a difference. Okay, so they do like this car a lot more. So let's take a snippet of this here. Okay, so we're looking roughly 246, 263, 258. So we'll just say 260-ish in this case, right? That's kind of our common. So let's go ahead and add a speeding ticket. And we're just going to say we got this summer of last year, June 1st of 2019. And we'll just call it a speeding ticket. And we'll see I was going 60 and a 55. I got a 5 mile over the speed limit. Keep in mind, so at this point, this is where it plays a pretty large factor. Some states and some companies have different ratings for this. So this is really up to the company what they rate and how hard they rate this. Also, some companies do accident forgiveness and they don't really do ticket forgiveness, but some states let you remove the tickets completely. They call it a prayer of judgment or a prayer of judgment. That essentially the judge can say, nope, doesn't count. We're going to forgive you. So yes, we added, wow, we're now coming back with nationwide flipping flopping. It's flippity floppy. Look at how amazing this is. This is why insurance gets exciting, because you're just plugging in all the pieces. And when you're talking to a guy live on the phone and they're like, yeah, I got to look at this. And you're like, why? Because you got all this stuff that comes up and they run it. And there was a ticket from 3 years ago that you didn't think affected you. And all of that stuff plays a big difference in the price. So we're trying to find the best fit. Now, Nationwide is okay with the ticket. They were $259, $260, we'll say, and now they're $281. So 20-ish, $21 more. That's not that bad, but let's see who did the worst. So we've got now Michigan Insurance. They don't like me, obviously, in this situation. Let's do a more realistic one. Progressive actually went up pretty big. They went from 278 to 339. I am no longer in this situation a fit. However, if you add all of their discounts and I paid in full, they're giving me almost $1,000 off. It's like, what, $800, $850 a year off to do Snapshot and to pay in full. There's not a whole lot of other discounts that we're missing. So that's a pretty cool deal if you can afford that. Honestly, agents should never tell you to put on a credit card, but I'm doing the math in my head, like how much interest, 3,000 times, let's just say a 20% interest credit card, right? So it's $60 a month. So it's still net $200 savings if I had to put it on a credit card. Don't necessarily do that because don't get used to doing credit debt. That's if I had a ticket. So let's do one last situation, then I'm gonna let you guys go. Let's go and remove the ticket. Let's just say we're squeaky clean, and let's just do an accident. So let's just say I got an accident. We'll just say same scenario. We'll say June 1st. We'll go 2 years ago, so 2018. So the closer this accident is, the worse it is. So we'll say about 2 years ago, we're going to choose accident with property damage. That's just the way we do it in Michigan. That means I hit a car, it's my fault. I chose that nobody was injured in this case. Anything over $2,500 is pretty much going to rate similar to itself. And let's run those numbers and see what happens. So I didn't snip at the last one because we took the ticket off. So we were about 260-ish before, and now we're in the 300s. So that at-fault accident plays a pretty large factor. Now, this is where those little extra kickbacks from companies where they do accident forgiveness and claims-free stuff like that, that's where that's going to play a pretty big factor. So the last thing I want to check is I'm just going to run this, and let's just say, for example, I know credit in most to every state, they say credit is not a rating factor. That is a lie. That is a loophole lie, we're going to call that. It technically isn't a lie because they don't use credit. But if I were to take your credit score and your insurance score, that's what they call it. It's a different way of calling credit. They got some other algorithm and math and all that stuff and set them next to each other. You're probably within like 10 points. So it is what it is. So here's what we're going to do. We're going to swap our named insureds. So we're going to put my wife first, or my hypothetical wife first, in front of me and see what happens. Now, in this scenario, it's probably not going to make as big of a difference because this is a made-up person. And I don't know if I doubt it's going to even get a credit score. It's going to do what's called a no-hit. And so it's going to give them an average credit score, where the other one was mine. I don't have great credit, so it's probably going to get better. So here's our first rates. So we had Safeco actually did come back very competitive in this situation. So where they were before, they were 3,700. They actually went up a little bit because that average credit score was worse than mine. So it's now 3,900. We were 330 a month versus 317. I don't know if that's including the accident because I don't remember if I typed that up on this one. So let's go ahead and remove the accident just to see, but this is what we're looking at. It did go nowhere, really. Well, this went down $200, or went up $200. It went from $3,750 to $3,906. Most of these stayed the same because they're not pulling a credit. AAA actually went up, which is weird because they usually take the best credit score of the household member. It's a new system for them, so maybe they're flip-flopping it. Michigan Insurance went down, so they actually liked that person better than I. Sad face. And let's just take off that accident just to see. I believe that's what this one was, without any tickets or accidents is. And let's see what kind of rating factor we get. We're trying to stay around the under 300. It was closer to that 280, I believe is what it was. Okay, so 255. Let's snippet this. And let's go ahead and flip the people back and just compare those. So Safeco's already coming back. I can see all these numbers are coming back better. Progressive stayed the same, the 283, 255 for Safeco. So it actually went down a little bit to 246. AAA now cares. It went from 318 down to 263. Nice one. Okay, so there's a lot of good stuff in there. All right, guys, I hope this was helpful. I ran through a lot of situations. If you stayed through this video, let me know in the comments because I am excited to have somebody that's interested in this too. I really like playing with the numbers and showing you guys different ways to save money. It helps me grow as a channel. It helps you guys save money. It helps you understand. Don't go out and just use this to try to fake information. That's not the point of the video. The whole point of it is to make sure that you guys get the best prices for your situation. Just know that there's so many different situations that you really, in all honesty, I recommend that you talk with an agent to help you get those best prices. If you're interested in that, actually the company that I work with uses a similar system to this. I'll link them in the description below. So if you want to get a quote, feel free to fill that out. Once again, as always, not the point of the videos. I make them based on what you guys are looking for and what I think I can add value. There's a benefit, gives me a cup of coffee if you guys fill out a quote. I'll see you guys in the next one. This is Mark Flockhart with Think Insurance.